Thank you for watching another episode of the CEO Barbecue. My name is Antonio, and today I'm going to Quebec again, where I'll be looking for high-grade gold in and around the historic O'Brien gold mine, which is located in a camp that's been producing gold for over 100 years now, I believe. It's in the Abitibi, and of course, I'll be joined by the CEO of Radisson Mining, Matt Manson, but not before I've warned you that this company has paid me to conduct this interview. And you should understand that this channel is a business that makes money by producing and publishing content in various forms. This means that you cannot rely on this video for research, and you should treat it as entertainment instead. You should also be aware of the fact that the mineral exploration, development, and mining industry is one of the toughest businesses out there. It's a very tough business to deploy capital in. Losing money is the norm and should be the expectation in this sector. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including geopolitics, macroeconomics, commodity prices, and more. And it should not be participated in by non-experts. Moreover, these companies are typically in the pre-revenue stage. They don't have sales, they don't have money coming in other ways besides financing, typically on the public markets. As a general rule of thumb, you're better off understanding that all company communications, albeit this interview, their website, their presentation, their social media accounts, and everything that these companies do is intended as marketing. And although I do not make buy or sell recommendations because I obviously have no idea what I'm doing, but also because there is a clear conflict of interest given the nature of my business, many out there will do exactly that. And you should be aware of that inherent bias, and you should be aware of that happening. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're consuming any type of company specific content, albeit on social media, albeit on YouTube, albeit on a company's website, or even mainstream media. It is safer for you to approach it with a dose of skepticism and assume that the party telling you about it is biased, is either getting compensated or owns exposure to the company, because there will always be a bias in a certain way, again, albeit disclosed or not. The fact that I have no idea what I'm doing should already be clear to you at this point. I don't have a long enough track record of consistent investment profits, so I should, under no circumstances, be considered an authority on any of these things. I am not saying this to try and be funny. Although this may sound amusing to you, it is not intended as a joke. I'm not pretending to be humble. I'm simply pointing out a fact and warning you not to rely on anything I say or do. Unfortunately, at least to my understanding, nobody out there has special abilities. The guest who is here likely as part of their marketing campaign does not have any superior knowledge, and they cannot know what's going to happen in the future. They don't know what will go up, what will go down, or what's going to go in circles. And none of us know whether any of the company's activities will result in a success. Again, given that we're talking about high risk, typically very early stage activities. Also, unfortunately, try as I may, I am not always going to catch all red flag or challenges with the company. So even if I end up asking a few tough questions, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I cannot guarantee the quality of anything presented in this video. This is all to say that you should not blindly trust me or anybody on the internet, and you should do your own research. Charlie Munger actually has a great quote about speculating in junior mining startups. And although his quote was not specifically about speculating in junior mining startups, it is very fitting. And he says, quote, "If you don't understand it, don't do it," unquote. I understand this is a long warning, a long disclaimer, but it is actually important for you to understand what's being said and written in here, because no guarantees can be made about future events. And past performance is, of course, not a guarantee of future results. What you will find a lot of in here, though, are forward-looking statements. Pause the screen and read the warning that you see in order to better understand what those are. because this is a conversation that is general and impersonal in nature, containing hopes for future events that may or may not take place, again, depending on many different factors. Before continuing on, please talk to a professional, licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.ca. That is where you do research. It is not on social media. You cannot do research on YouTube or social media or investment blogs or chat boards. You go to setterplus.ca, and that is where you'll find the company's official filings. If you don't do that, you're not doing research and you're highly likely to lose your money. If you didn't have enough time to read the disclaimers shown on the screen as I was talking, or if you didn't understand them, you should not be consuming this content because you might be putting your capital at risk. With all that said, I can actually kick off this interview with the CEO of Radisson Mining, Matt Manson. This company is listed as RDS on the TSX Ventures Exchange in Canada, where an average of about 90,000 shares trade daily. The 52-week high is 33 cents and the 52-week low is 15 cents. And with a market cap of about $105 million and about 342 million shares outstanding, today this is a 31-cent stock. As of the last financial statement, I see 15.8 million warrants and 17.4 million options, which brings us to over 375 million fully diluted shares, meaning an increase of just about 6.5% in shares outstanding can be expected if all of those options and warrants get exercised, which would then also result in about a 6% ownership dilution. Again, if, and that's always a big if, but if those warrants and options get exercised. Insiders here own 9% of the company, 20% is estimated to be owned by institutional investors, and 34% is owned by high net worth individuals as well as regional stakeholders, leaving about 37% of that float in the effective public hands. A lot has happened since Matt and I last spoke, including a new financial statement has been published showing the numbers as of September 30, where I can see about $5 million worth of current assets, 4.5 of which at the time was cash and cash equivalents. However, it is worth noting that since the effective date on this financial statement, the company closed a $7 million private placement, which was oversubscribed. Matt and I also talked about that. But the cash position will look different by the time you're watching this. That's why I'm bringing that up. Current liabilities at the end of September sat at about $1.1 million in the form of accounts payable and accrued liabilities, with the non-current liabilities portion being deferred income and mining taxes, as well as a small portion of a flow-through shares premium, together worth about $5.5 million. That same financial statement also provides a bit of an insight into essentially how the company has been spending its dollars since the new CEO joined in July, I believe, with the total administration costs for the 3-month period ending in September of 2024 coming up to about $400,000, although that includes some non-cash expenses like a $23,000 worth of depreciations, essentially, as well as $108,000 worth of share-based compensations and payments, which, when subtracted, leaves us with an average monthly G&A over the last reported 3 months of about $90,000, where about 55% of that total cost went to the various forms of compensation, including salaries and benefits, as well as experts and subcontractors, and about 30% of the administration spend went toward investor relations and communications. On the exploration and evaluation side, the total cost for the 9-month period now I'm looking at was close to $4.1 million, or an average of about $450,000 a month. And it is note 5 that provides us the breakdown, where we can see that over 54% of that spend actually went into the ground in the form of drilling, with geologist salaries, assays, consultants, and CAM G&A making up the rest of it. I have 2 ratios here to summarize those financials, though. The first one I call the exploration to administration ratio, which sits at around 5:1 for Radisson, meaning over 80% of the overall spend went to exploration and evaluation. So that means less than 20% went toward what I call G&A, so salaries, office, marketing, and so on. And speaking of marketing, the second ratio is the drilling to marketing ratio, which for the 9-month period sits at almost 13, so 12.9 to 1 to be specific, which is, again, a good ratio to have, I suppose, at this point, where they're spending more money on drilling than on marketing. As always, though, I would like to remind everyone that this financial statement is nothing more than a snapshot in time, in this case, specifically at the end of September of this year, which is almost 3 months ago now. So the finances will have changed by the time you're watching this, because this is obviously a non-revenue generating company. They're currently drilling and they're using their treasury as well as the public markets to finance operations. And of course, try as I may, I'm not infallible. I'm no stranger to mistakes. I routinely make mistakes, actually, my reading and understanding of company financials. So to be on the safe side, you should head over to setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. A new financial statement is not the only new thing since Matt and I last spoke. There is, of course, a new management discussion and analysis as well, and that too can and should be read through Setter Plus. But that's not really why we're here today, Matt. There have been 3 news releases since our last conversation, all 3 of which about drilling. So maybe we can kind of take it chronologically and better understand what's been added to the story since we last spoke. Chronologically, we'd start in October, so October 30, and we're going to work our way toward December 9 and subsequently December 16. Now, on October 30, you announced results from 10 holes that are part of your currently ongoing 35,000 meter drill program. And the headline grades were 16.2, 12.1, and 62. And that is not a typo, 62 grams of gold per ton over respectively 5.4, 4.4, and the highest grade, so the 62 grams, was an interval of about 1 meter. So a couple of things about this. First of all, these are apparent widths, and the true widths you've estimated to be, for the different intercepts, between 30 to 70% of those intercepts. And there's also clear grade variability. I know I've asked you this before and we've talked about it, and that is the nature of the mineralization at O'Brien. But now, having seen this news release, Matt, what additional insights is it giving you into how you'll be dealing with the variable yet narrow high grade nature of this ore body?
Yeah, well, morning, Antonio, and thanks for having me on again.
Pleasure.
So the character of this deposit, and it's not atypical for the region, and especially deposits, quartz sulfide veins in the Piché group adjacent to the Cadillac-Lard Lake Break, which is the setting within the Quebec Abitibi, very well known and well understood setting. So this is a narrow vein deposit, where we have maybe in core length terms, 6, 8, 10 meter wide intercepts of sheared and mineralized rock, within which will run usually gold grades, sometimes above the resource cutoff and sometimes below the resource cutoff, but always with something. And then we'll have likely within that interval, a meter of core length that's all visible gold. So, which is usually the central vein within this deformed and mineralized zone. So when we publish our results, we try and give that character of the deposit. We're going to be mining the narrower parts of this, but enjoying the fact that occasionally we will have bigger stopes where we have thicker resource grade material. And when we're mining the narrower stopes, we're going to have grade sitting in the wall rock dilution that's coming into these stopes. So our disclosure attempts to communicate this attribute of the deposit. That's what the O'Brien mine was historically when it was mined, and that's what it is now. But by high grade, where it's considerably high grade. And now you highlighted the press releases since October 30th. I'll go back to September 24th. And that was actually very important for us because as we've been drilling this year, 35,000 meter program, we've been combining a mixture of shallower holes, looking to plug gaps within our existing resource model at shallower depths. And by shallower, I mean in the first 500 or 600 meters of the deposit, where the bulk of the resource is currently defined, 75% of it. But then also deeper holes below the base of the existing resource, drilling where we don't have existing gold, essentially. And that's below 900 meters. That's the base of the resource. So starting on September 24th, we began publishing these deeper holes. The September 4th press release and the October 30th press release was a mixture of holes. But since September 24th, if you strip out the deep holes, we've had 7 of those, and 5 of those 7 have hit good intercepts of resource grade material. And some of those holes have been considerably high grade. And again, if you look at some of the results we've had, and I'm just going to read off a side screen here so I get the numbers right, they're all falling into this characteristic pattern of these broader zones with a really hot sort of 1 meter intercept sitting in the middle. So we had 27.6 over 6 meters that was dominated by 100 grams over 1. We had 8.75 over 5 meters dominated by 27 over 1. And it goes on 3 grams over 10.9 dominated by 13.9 over 1. And then this morning, we press released the best of them all, which is also the deepest hole ever drilled on the project and the first hole ever underneath the old mine. And it's amazing to think that in 70 years since this mine stopped working, it stopped working in about 56, 57, there's never been a hole put underneath it. After 260,000 meters of drilling, well, actually almost 300,000 meters of drilling now after this year. So we put the first hole underneath the old mine, and we hit 31.2 grams over 8 meters, including 242 over 1. So again, it's the same pattern. In that case, it was a relatively low grade, but mineralized 8-meter interval dominated by this 242 over 1 sort of seam of VG sitting there in the middle of the intercept. And that's, again, typical O'Brien type style of mineralization. So of those 7 deep holes now, 5 have done that essentially, right? And that's where we're drilling blind, really. We're just sort of saying, okay, well, let's imagine this thing goes deeper and let's plug a hole down there. And we're not trying to mirror holes here. We're not trying to re-drill areas that have been drilled before. This is completely new. Let's just project things down and plug a hole. The batch of holes we put out starting on September 24th, it was a clutch of deep holes that were about 170 meters below the base of the resource in that particular area. The one this morning was 500 meters below the old mine with nothing in between, right? And no targeting information, just let's go deep. And that gave us classic O'Brien mineralization at very, very high grade. So that's 8 ounces per ton over that 1 meter interval within that broader zone. So that kind of describes the nature of the ore body. We're not running away from the fact that this is a high grade but narrow deposit. That's what it is. We're trying to communicate here the attributes of the grades within the narrow pieces, the grades within the broader pieces, and how that's going to, that's how that's going to form a mineable deposit in the future.
I do want to talk about the depth of those intercepts. You had one of the intercepts in the October news release that I was talking about was 6 meters, carrying 27.6 grams per ton, was also very deep, so over 1,100 meters. I want to talk about that. I saw that you had a news release right before we got on this call, so I have it here with me. So I'll try to come up with a couple of questions about that as well. Yeah. I do want to talk about the depth because
it sprung it on you a little bit there. Yeah,
it is. Well, the depth is interesting for sure. So we're going to talk about it. But what I'm thinking, and as far as I understand, again, 75% of the resource you have is above 600 meters depth, but you do keep drilling deeper. You can maybe explain that to me a bit differently here, as in explain to me the cost benefit analysis, as in what is the expectation for the influence the deeper stuff might have on the overall economic viability of the project come time for PEA and eventually come time to put it into production.
What we're trying to, so this type of deposit, these narrow high-grade deposits require a lot of drilling. Right? When you're actually preparing it for mining and you're doing an underground mine design and you're scheduling your stopes, you require, very detailed drilling, right? Now we're drilling from surface, and there's no way we're going to be able to achieve that detail of drilling at these deep levels from surface in any kind of economic way. So what we're trying to do here, we can achieve that at surface. And then, of course, in the mining scenario, doing a lot of development drilling ahead of you, and you're sort of, you're getting that data set before you're developing your mine. But for this deep stuff, what we're doing here is simply giving directional guidance to ourselves and to others about what the potential scale of this project is. Because the old mine went from surface to 1 kilometer, and then it stopped. And it stopped for economic reasons, not for geological reasons down there. And that was back in the 50s when gold was a certain price and costs were a certain price, right? So that's where it stopped. And mining technology was a certain thing. all of the new resources on the eastern side of the old mine. And there's a number of trends, grade trends that have been developed on that side. And again, yeah, so of the million ounces we have right now or so, 75% of that goes down to 600 meters, and then the rest is down to 900 meters. And nowhere does that go deeper than the old mine. And there's a little bit of resource on the western side, and there's a 5 kilometer strike extent. So there's upside going laterally here. But what we're trying to we've estimated just in the back of the envelope, Antonio, that if we get in what the old mine did, and the old mine did about 500,000 ounces at half an ounce average grade, and down to a kilometer. And then in what we have with the existing resource, in what we call our trends 0, 1, and 2, which is the three closest grade trends and resource trends closest to the old mine. It goes out to number 5 eventually in the east, but just the central ones there and the old mine. Just if what we've got there is representative of what there is down to 2 kilometers, that's about 3 million ounces, right? So we want to test whether or not that thesis that there's that amount of gold to that depth is realistic. And so for us, we're having the courage, because it does take some courage to do this, right? The easy thing to do is just drill where you know you're going to get a good result, and then you've got a press release with a good result. We're drilling in places here where we have no idea what we're going to get. But, we're geologists, we're explorationists. This is mesothermal gold. It's a reasonable thesis that this mineralizing system continues down. And we're and 5 of the 7 holes hitting is telling us, just the statistics of that success rate is telling us that yes, this system is continuing down. And the grades we're getting are telling us, and the type of geology we're getting, and the style of deformation, the style of alteration is all familiar with what we have higher up. It's the same system going down. And in our IR presentation, we've got this graphic that shows you the long section of all of the deposits in the area, and there's a lot, right? And over about a 50-kilometer wide sort of interval, there's a lot of deposits, and we show the depths that all these deposits went to. And of course, every deposit can go to a different depth depending upon value. I mean, LaRonde, which is right next door to us, is a different beast. It's a world-class deposit. It's a polymetallic deposit. It's got large stopes, and it's down to below 3 kilometers. It's almost at 3.5 kilometers depth. So we're not that. But if you look at, for example, Lapa, which is the analog for us, again, narrow, high-grade quartz sulfide veins in the Piche rocks adjacent to the Cadillac Larder Lake Break. That's our deposit. It's just to the east of us. It went down to about 1.5, 1.7 kilometers or so depth, and it started about half a kilometer down. So it was, underground and mined at those depths. So what we're doing with our deposit, knowing we got most of the resource to find in the shallower drilling, directionally, what do we have underneath? And it looks like we've got the same system continuing down. We're a long way away from having that turned into any type of resource. But there's another analog out there in recent history of Quebec mining, which is the Island deposit, owned by Richemont, acquired by Alamos. And Island was a mine for many years that Richemont were running. And it was a bit of a bumpy experience for Richemont at the time. And the focus of the company for many years was, get the mining right on the mine. And so the focus was the resources to find in the top 500 or 600 meters, and that's where the mine was. And it was, don't bother about what's down below. Let's focus on getting the mine right. And at some stage that changed. They sort of said, well, let's drill deeper and directionally understand the scale of this deposit down there, which will put into context perhaps the value of all the effort we're putting into getting the mine right. And that's where they began hitting some really nice intercepts. The value of Richemont began taking off as people began, again, directionally realize what they had. When Alamos bought them, I think for about 750 million, the resource was at about 1.5, 1.7 million ounces, and on its way up. But it still wasn't, a spectacularly big number. But what Alamos saw in that deposit was all of this directional value being generated, right? And they, I think, very correctly saw the upside. And Alamos got a lot of, you may remember that deal was actually a little bit unpopular in the market. Alamos got a lot of heat
Yeah.
for supposedly overpaying for Richemont. And now it's about 5 or 6 million ounces, and it's a cornerstone asset, and it's doing fantastically well. So I'm not comparing our deposit to Island Gold, but what I'm saying is that the similarity is strategically what we're trying to do here. Where this company has been drilling the top of this deposit for many years, so can we directionally give guidance as to what we think the overall scope of this deposit is going to be by going down, and let's open people's eyes to what that might look like.
I know you have a figure in mind about this. We've talked about it before, but now that you've seen these three news releases, what's that figure for you? Like, how big can this thing get come time for you to do a PEA on it, or an FS or whatever it might be?
Yeah, well, I think we're pretty close to being able to do a PEA, and this will be 1,000 ounce, 1,000 ton a day type operation, right? Maximum 1,100, 1,200, but 1,000 to 1,100 type operation. That's the right size for this type of deposit, right? And so right now, with what we've got in terms of our existing indicated and inferred resources, we've probably got a 9, 10 year mine plan on that basis right now. So uh, uh, we're in the zone of being able to do a PEA. We've held off doing a PEA because, as we've told the world, and certainly many times since I've come on in July, this will not be a standalone mine. So we should not be building a mill for this project, and we should not be building a tailings facility for this project. It's not a standalone project. We are surrounded by other people's mills and tailings facilities. So it should go to somewhere else. Hub and spoke mining is the pattern of mining in the Abitibi. That's how it's been done. We are on September 9th, we announced we had signed an MOU with IAMGOLD to do the technical work around our ore going to the Doyen mill, which is one of the two closest mills to us. That's the mill attached to the Westwood mine that IAMGOLD run in the Abitibi. Doyen has 3,000 tons a day capacity. Westwood itself is doing 1,000 tons into it. We would be another 1,000. It makes a lot of sense to think about that. And so to do a PEA, we want to have established what that looks like, right? We don't want to have a what if PEA. We don't want to show a PEA building a mill and a tailings facility, because that's not what we want to do. And we don't want to have a PEA that's got a what if mill sort of situation. So we're doing the work with IAMGOLD under that MOU, and that's metallurgical work that we're doing on our side of the deal here with SGS and Osenko supervising. And IAMGOLD are being very, very collaborative and on sharing how the Doyen mill is set up and what flow sheet modifications might be required to take our ore through there, and then what the tailings strategy is going to be. And once we understand that better, we will be in a position to do a PEA. We're a long way away from a pre-feasibility or a feasibility. That's going to require a lot more drilling, to be honest, infill drilling, so that we can turn things into a mineral reserve. But we're pretty close to being able to pull the trigger on a PEA.
Hmm. What does pretty close mean in terms of time? Like, when do you want to have a PEA?
Well, what we've said is that when we announced the MOU with IAMGOLD on September 9th, we said that upon the successful conclusion of that work, meaning we don't see any red flags to O'Brien or going through that mill anyway, we would it start a PEA. And a lot of that work has already started in a preliminary sense. That's mine scheduling, mine design, capex opex estimate, permitting, environmental assessment requirements. But we're gonna defer the formal decision to do that work here until we get the get the horse in front of the cart here. We're gonna get the technical work finished around the Doyen mill first, give some guidance to the market on what that looks like, and that's probably going to be sometime early in the new year.
Hmm.
And then that would be the starting bell for the PEA.
What is the economic case, though, Matt, for mining at these depths? I mean, is it doable? What does it need to be economic? Like, are you going to be testing the integrity of the rock and maybe just generally talk because it is exceptional. I mean, you're drilling essentially this last news release that I have here in front of me. 1,700 meters is where you've hit that. Where you're still hitting mineralization. Yes, it is high grade 200. It's over 200 grams. It's over 1 meter. So that's something we just touched upon. But what is the economic case for mining at these depths, and what do you need for it to actually be economical?
Well, I think that's something that we'd work out in the PEA. It'll be driven by how much development meters you have to do, and haulage design, haulage strategy. I mean, we're contemplating here not using the old mine infrastructure, leaving it alone, putting in new ramps for mining, and then but combining that also with vertical conveyors, so the trucks don't have to. It may be some sort of combination of mine design, so that trucks don't have to go all the way to the surface with ore. So I think, look, when you're designing a mine, you put in your development meters and underground maintenance. You put in your development meters. You put in your unit costs. You put in your operating costs to mine it and transport the ore to the surface, and that generates a cutoff calculation for what's economic ore and what's not economic ore. And then you look at your stope design and your mine design, and you make an assessment as to whether or not ore at a certain depth is economic to do. Um, right now, I don't see any impediment at all, given the grades we've got, given the costs we've got, and given the gold price environment to mining at least down to the depth of the old mine at a kilometer. I think personally, what we're going to discover is that the natural economic boundary for this project is closer to 2 kilometers eventually. And so that's what we describe as our exploration horizon. I don't think you'll see us try to drill below 2 kilometers, because I think that's getting a little bit more conjectural. But I think it's a reasonable supposition at this stage that something down that depth is going to work. Lapa went down, as I said, to about 1,500 meters or so, and that was in a different gold price environment 10 years ago. So I think we should be looking at about 2 kilometers, given the types of grades we're seeing here. Um, and I think that's a reasonable position for us to be in right now. Look at 1,000 tons a day, where we've got 9, 10 years of mining perhaps already on the existing resource down to its existing depth. We're talking about something 15, 20 years down the road, right, at those depths, right? So, but looking from where we are now in 2024, I think that's the perfectly fine exploration horizon at this stage.
What about the integrity of the rock that I mentioned? I would guess, obviously not a mining engineer, but I would guess that matters too.
Yeah.
Talk to me about, again, integrity of the rock, lithologies that you've drilled through on your way to this 1,700-meter hole. What did you find?
Yeah, I think again, we need more data than we have to be able to talk authoritatively at that on that sort of side of things. What we do have is the experience of mining in the old mine, and we have our RQD data from the core, and we don't see any big dramas at this stage. In fact, the RQD data has always been very good in the types of rocks that are hosting our mineralization, which are the Pichier metavolcanic metasedimentary rocks, and then this intrusive porphyry unit. Those are very competent lithologies. Those are in the hanging wall of the Cadillac Larder Lake break, and then you go through that and then into the footwall Cadillac sediments. If you're mining in the break itself, that's a different scenario. That is less competent, and that's more troublesome. But we're talking about rocks here that are a much more competent part of the sequence, and so far we don't see any issues. But again, it's very early days, right, on that type of
Mhm.
thing. And I think At some stage, there would be a bulk sample in this project to go underground and take a large sample. We're actually permitted already for that bulk sample, and we're assessing what will be required to do it. You'd be doing it for metallurgical reasons, and you'd be doing it to test mineralization and grade continuity reasons. That would also give you data on ground stability issues and mining quality parameters. But at this stage, and it's a good question because there are other projects around us that have had a different experience in that regard, right? And so it's a relevant thing for us to be thinking about. But where we are in the setting with the data we've got, it's not a red flag issue for us at this stage.
Was it easy to get to that depth though? I mean, I suppose after a certain depth, the drillers kind of start slowing down or whatever. But how long did it take you to drill that hole?
It took us a few weeks. Yeah, I mean, it was it's it's not what one of my directors keeps reminding me to sort of not use the word deep so much, because in the grand scheme of things in Quebec and in Quebec mining, we're not actually that deep at that level. Um, so and Quebec drillers can, especially the drillers we use, are perfectly able to do that type of hole. Um, uh, but it does, it obviously, the deeper you go, the longer it takes. And, we very rarely, Antonio, lose a hole. The good ground conditions are such that it's very rare for us to have to abandon a hole for any reason.
Hmm.
So when we make a commitment to go that deep, and it's a big financial commitment as well to do it, and a time commitment, we have the confidence that we're not going to lose it. It just takes time to do it. And of course, that the deep hole actually had an interesting genesis because it was meant to just be a pilot hole, really. Yes, we were going to just plug a hole underneath the old mine, and we hoped we'd get something, but we'd no targeting information. It wasn't as though we were trying to drill 100, 50 meters away from a previous hole that had given us some joy. This was, in the middle of nowhere, and the thinking was, let's do a pilot hole. And then we will do directional drilling and wedges off that pilot hole. And with directional drilling, we can do a grid of holes going from that depth back up to the base of the old mine, right? And that's actually what we're doing right now. And that will be part of the program for 25 as well. The fact that this hole actually did give us something, it went through Pichet rocks, exactly where we expected them, exactly the same sequence of lithologies. And then it hits. There's a cross section in our press release this morning, figure 3, which I'll refer you to. You'll see that we went through exactly the same sequence of Pichet rocks. And then within the unit that the old mine stopes were developed, which is the porphyry unit, that's where we got the the longer zone of mineralization, deformation, alteration, within which we had the gold and the 242 grams over the meter. So a perfect result, right? If you had planned that, if you said, okay, well, here's the old mine, here's the unit it's in, here's where the geology is going, let's cartoon that out and make a prediction what we're going to get. That's what we got, right? It was a fantastically validating and confirmatory experience for us. But again, meant to be just a pilot hole, no expectations, and let's use it to drill elsewhere.
Hmm. How much did that hole cost?
That hole was probably about $250,000 at the end of the day. And
So
now
it's
all the holes we do off it will be more cost effective because it's already there. But to go down that deep was probably close to $250,000.
so it's not that's what is it, $150 a meter? Yeah.
175
Well,
per
I would have thought
meter.
it's much more expensive. How come? Like, why is it not? I would have thought it's like way more expensive.
Well, 175 per meter is our average drill cost,
Okay.
Canadian, in 2024. It's very, one of the benefits we've got drilling and where we are is that the drillers go home to their own beds at the end of a shift. So everything's available, lubricants, drill rods, replacement parts, rigs, drillers, everything's available. So it's very cost efficient and very time efficient as well. So that drives now as we go deeper, the cost per meter does go up. as you go deeper. And when you're doing directional drilling, that's another cost, and wedges, that's another cost again. So probably our average drill cost next year will be higher than what we achieved in 24, right? And we're probably on a unit cost basis at that transitional point right now where our costs are going up because we're going deeper. But it's not a, if you're drilling up in the north of Canada, or in the west coast, Yukon or BC, where you don't have infrastructure, you're camp based, and you're maybe helicopter supported, it could be 2 or 3 times those costs.
Yeah. Yeah, exactly. I do. Well, but it makes sense that it is good. The cost is increasing as you're going deeper. I'm noticing here, by the way, Matt, you're using cutoff grades, or you've changed them, I think, because they're 1 grams per ton. Again, different than I believe your resource and different than other holes that
Yeah.
I hope we can touch upon the jewelry box as well. But why this cutoff grade? What happened?
Well, so and hopefully this is explained in the notes of the tables in our press releases. The resource uses a 4.5 gram bottom cutoff.
Mhm.
Now, if and that uses a $1,600 gold price, an 85% recovery, and a certain assumption on mining costs. If we were redoing that resource today, the cutoff would probably be pushed down closer to 3 grams per cutoff because you'd be using a higher gold price. We think the recoveries will be higher in the final metallurgical results, and the costs that we're seeing are actually pretty close on. But you'd use a lower cutoff. So 3 grams is probably the cutoff that we would be using in the future. And when we published the resource last year, we showed sensitivity of resource on different cutoffs. And in all of our graphics, we usually show the 3 gram cutoff, then the 4.5 gram cutoff, and then we go up from there. And at 3 grams also, there's a lot more continuity. At 4.5 gram cutoff, the resource tends to be a little bit spotty. At 3 gram cutoff, it's much more continuous. So probably 3 grams is where we should be. So when we press release our drill intercepts, we usually today's press release and last week's press release is one hole. We're a little bit different, but usually what we do, our table 1 is intercepts calculated using that 3 gram cutoff, right? These are the intercepts that average above 3 grams. We're not showing you the intercepts that average below 3 grams. And then we show you in table 2 all the other intercepts that average between 1 and 3 grams. So 1 is the effective bottom cutoff for our disclosure in table 2. And what we're doing there is we're trying to show you how many zones there are, because we will go, as we go through the Pichet rock with a drill hole, we will go through multiple zones. And some of them will be very high grade, and some of them will be very high grade and above the resource cutoff. But some of them, the next zone down might be a few meters of 2 grams or 1.5 grams. Now, that is still of interest to us because that zone may turn into a high-grade shoot just laterally, and we're interested geologically in what that is and where that's going. And so some of these will be so in our disclosure, we're telling you where all the gold zones are, and we're telling you what the resource cutoff was, 4.5, and likely will be 3. But we're also telling you what's below that because that's geologically interesting. Now, we had so sometimes we'll go through a 6 or 8 meter zone, and it'll be deformed and it'll be mineralized, and it will have a hot hit in the middle. And we take that hot hit out and we calculate what the residual grade is. Sometimes that residual grade is above our 3 gram future resource cutoff. So we know the whole 6 meters or 8 meters is going to be ore. And sometimes when we take that hot hit out, the residual grade is below that 3 gram cutoff. So we know that the rest of that is not going to be ore. It's not going to get into the resource, but it's going to be, let's say it's 1 or 1.5. That's still of interest because it's going to be grade in the mining dilution again that narrower zone is going to need as we mine it out. So I concede it's a little bit of a complicated, confusing story here because we're again trying to communicate the reality of having narrow high-grade stuff within broader zones that are deformed and mineralized and altered and carrying gold. And so, for example, of the 2 intercepts, these deep intercepts we've recently press released, hole 324 which was the one 170 meters below trend one, had 27 grams over 6 meters, including 100 over one. You take the 100 over one out, the rest of that intercept is above 3 grams. So that whole 6 meters is going to be resource. The one we put out today, you take the 242 grams out, and the rest of the intercept is about 1.5. So it's above that one line, but it's probably not all going to get into the resource table. But it's still an 8 meter wide zone that's carrying grade. And we know from experience that 25 meters to the side, it may turn into a resource grade material in its entirety. We know that's how this thing works. And so, again, it's geologically relevant to us that it was an 8 meter wide zone that was carrying gold to some degree. And there were actually two instances of VG in that intercept. One instance of VG gave us 242 grams. The other instance of VG gave us like 2.5 grams. And so clearly the VG was on the side of the core that didn't go into the lab because everything's done randomly, right? So again, it's still relevant that that whole 8 meter zone was mineralized and was carrying gold.
Do
A
you
little
have
bit of a complicated story. We try to explain it in our footnotes of the tables, as I said, but it's all calculable and evident, I think, in our disclosure.
do you have to re-assay or do your assays twice or something like that when it's high grade like this?
Yeah, so we do fire assay first on everything, with a gravimetric finish on samples that are grading above 10 grams, I think, after the fire assay. But then we also we have a lot of free gold, a lot of coarse gold. So when you're using the fire assay technique, your aliquot of sample is actually quite small. And so we then will submit the samples that are around the VG, the observed VG from the logging. We'll resubmit those again for metallic screen work. And that is taking a bigger sample. There's a manual kind of sieving process, and you're capturing the coarse and nuggety gold in the sample. And there can be quite a difference between the fire assay result and the metallic screen result. And the metallic screen is also capturing a situation where you've got a few instances of nuggety gold in your core. Your fire assay aliquot just happened to not see that. And you're taking a bigger sample with a metallic screen, you're capturing that. I think we're a candidate for the fusion technology as well, which is something that we want to explore with this core, because with the amount of coarse and free gold we've got, we're probably undersampling it just with fire assay, and we've used the metallic screen method relatively sparingly as well. In the past, it's a more expensive technique, and we don't want to do it in every sample. So the company has been somewhat sparingly in that. So I don't think we're over sampling the gold in this core. Put it that way. I think if anything, there's more to be found. And I think my previous role at Marathon Gold, Marathon had been using metallic screen and fire assay combinations on a huge volume of samples for many years, and that probably now I think, in that project, is probably the world's best database for what you get on a metallic screen assay compared to a fire assay on the same core. And there's a lot of free gold as well. And I think when I was the CEO of Marathon, we had an ambition to publish that academically as a case study on with a huge data set at that stage, statistically what you're going to get. And we were seeing typically, upwards of 15% better grades in the metallic screen versus fire assay on that type of deposit. So it's not dissimilar with us here at Radisson because of the amount of free gold. And that's evident in the visible gold we get, and it's evident also in the amount of gold we expect to get from a gravity circuit in the future mill, which is pretty high. So it takes quite a few weeks to go through that whole process to get a result that can be published. And those results we put out this morning, and those other deep holes were after metallic screen assay.
You did also have news out of what you call or what you assume is the jewelry box, which is essentially the
Right.
narrow vertical chute that's believed to be the source of those high grade visible gold museum samples that you've showed me before. I believe you have a video of it too. And it is indeed spectacularly high grade. I believe the headline for that news release was over 1.3 kilograms of gold,
Yep.
right? So, and again, 1.3 kilograms, so 1,300
Yep.
plus grams. It was over 1 meter again, so narrow as we've discussed so far, which is this is definitely good for a headline. But I'm thinking, how significant is finding this jewelry box to the development of the project into what you believe it can be, and specifically from a size perspective, right? Because I believe it goes from 250, or I believe you believe it goes from 250 to 750 meters deep, right? So how significant could it be from a size perspective?
So this is a great story, and it doesn't come out of thin air. So the old mine was famous for the production of really spectacular museum quality gold encrusted rock samples, right? Really spectacular, but very localized visible gold. And there's one stope that we believe was the source of all those samples. It's a pencil stope that goes from 250 meters to 750 meters continuously,
Mhm.
right? And we know from the experience of the old mine, all the mapping that was done there, that the best gold, the best grade are in these vertical chutes. And they're usually where you got these continuous east-west veins, but there are areas where the veins converge, or you might get a localized folding of a vein and a concentration of vein material. And that's where you get the best gold. You don't, and you get the best, you get good thicknesses there, but you also get a concentration of gold mineralization in these in these areas. So what, for example, this pencil-shaped, rod-shaped stope, which would only be in a few meters wide, what that probably was probably the intersection of two vein sets, giving you, two planes intersecting, give you a line, and but that line had a 500-meter continuity, right? So that is actually an extreme example of what the O'Brien mine was. It was these areas of grade enhancement, grade chutes that had a verticality to them within a system of east-west trending veins within the Pichet group. So um, the this is the jewelry box stope we're talking about, this pencil shaped thing, and so it disappeared above 250 meters, and they tried to find it. There are exploration drifts that went over so they could set up drill platforms. We have records of how they looked for this thing, but they couldn't find it between 250 and the surface. So we've been coming into that area from the east as our drilling kind of goes closer to the old mine, and we've got resource quite close to there. And so in this shallower program that we've been doing, as well as the deep drilling, we've been plugging holes within the resource model at shallower depths. And there was a hole in this area that was offset to the east of where the jewelry box had ended. I'm sure you'll put up the section on the video, and your viewers can sort of see what I'm talking about. So the hole that we went in was plugging a gap between existing resource and the end of that jewelry box though. And the thought was, well, this will help us explore for where the jewelry box might be going. And lo and behold, it went through a 2 meter wide zone. It was again a 2 meter wide zone of mineralization. I think the other meter was like 10 grams or 15 grams or something, and then there was one spectacular, meter of it was all a meter of gold, and not just specks of visible gold like nuggets. The video ends with the big nuggets at the broken end of the core, and if you had taken that core and broken it, you would have seen naturally it broke on this nugget. There was another nugget that broke on as well, but that's your type. That's the visible gold museum quality stuff that ended up being mined and sent to museums. There's a collection of them in the Royal Ontario Museum in Toronto here. So that's that wasn't out of thin air. That is above and just to the side of a stope that we believe gave these types of results and went for 500 meters. So if you just put some numbers together here, so how important it is for us? Well, first off, it's a lovely thing to have because it illustrates uh, a really important attribute of this project, which is localized very high grade. That was an attribute of the O'Brien mine, and we hope that's an attribute of a future O'Brien mine, and that will never be captured in a resource because you'd cap that all away in a heartbeat, right? So it'll be something that the miners enjoy when they come across it, right? But we as mining professionals have to understand that we have the potential for that type of situation to rise. But if we have fun with numbers, so how important would it be? Well, I'm going to do some back of the envelope calculation here. So forward-looking statements, fully apply from this moment on. I'd take no responsibility for anything I'm about to say. But so what does that mean? If you've got 250 meters of like a 2 meter wide zone that's averaging 300 grams, so 10 ounces, say. This intercept was 600 grams over 2 meters and 1.3 kilogram over the meter. But let's say you're mining, let's say you got a 2 meter wide zone at 300 grams, and that's all you've got. There's no continuity other than it goes up to surface, right? That's about 30,000 ounces, which is about $85 million, right? So that is a big chunk of the potential capex of this type of project, which is going to be a low capex profile because we're not building a mill, we're not building a tailings facility, and we're not building surface facilities because we're so close to town. We have infrastructure already. We're just building underground mine. So if you've got something that close to surface on that scale that can deliver that amount of immediate or early stage cash flow at those types of grades, even though it's small in the grand scheme of things, it's a really nice thing to have. Of the two press releases that we put out in the last week, the jewelry box press release with the 1.3 kilograms and this deeper press release with the 1 meter 242 within that zone, 500 meters below the mine. If you ask me which is the more important one for the future of the project, it's the deeper one, because that is telling you on a scope basis where this project's going, right? And its potential scale and the scale of the mineralizing system. I think the one that has really opened people's eyes to the project is the jewelry box one, the 1.3 kilograms. And I'll tell you, Antonio, in my career, I was in the diamond business for many years, and you'd occasionally get a piece of drill core with a diamond stuck in it, right? And that would be, oh my goodness, look at this. But I from a value point of view, on a per meter basis, I don't think I've ever personally had anything come out the ground that is like that, right? And with that much of value over that width. And knowing what it represents. Again, it's not just some sort of lucky break in the middle of nowhere. It is the continuation of something that historically did that over 500 meters of depth extent. So yeah, it was a really nice one to have, and it's illustrating to, I think, our shareholders and to the general world that, again, that is an attribute of this project. You get these extremely high localized grades that will be really enjoyable by the mining guys, and which you'll never be able to capture in a resource because, again, you'd cap it down as you should.
Just exactly because it is not a lucky coincidence that you happen to stumble on. I've been thinking about this intercept happened at 200 meters depth, right? And in hindsight, it kind of looks obvious, like it looks like it should be there in the first place. But so why hasn't anyone found this jewelry box yet before you, given the historic work on a project? Like as you said, the project has had now with you, what, 300 or over 300,000 meters of drilling. So how did nobody find it yet?
It might be a 2 meter wide pencil, and you're trying to find that with a line. If you're trying to intersect a line with a line, it's really hard to miss. If you're trying to intersect a line with a development exploration drift, that's also a line essentially. It's very hard, right? So it raises the point: what else is out there? What else is out there that hasn't been found? Right? Again, it's one for the miners to sort of enjoy down the road. What we're going to do, though, we're going to have some fun with this, because we are going to try and drill and hit it we hit this at about 200 meters depth. So the thesis is it will go to the surface. So can we hit it elsewhere? But now we've got one intercept, we can start tracing it to surface, and we're going to look for it on surface. So we can strip on surface. So we can, that's a plane to find the rod. And can you imagine if we actually found this thing at surface? It will be standing on gold, you know. So can you imagine the site visit we can do with investors when we can take them to something like that? You know, can you imagine the security issues we'd have to have if we found that. We'd have to be pretty confidential as to where it was. But we're gonna that's what we're gonna do. We're gonna go for that next year. That's part of our exploration planning for 2025 to strip on surface and find it there, right? So, but again, look, it's not at the end of the day. It's again, the deeper holes are probably more meaningful to us because that's where the ounces are going to come from. That's where the scope of the project is going to be realized. That's where the I think the value is going to come from.
Hmm.
But this is telling everybody there's an attribute of this project which was there historically, is going to be there in the future, and let's understand that, you know, extreme high grade on a localized basis is a characteristic of this project.
I want to talk about what you're going to do in 2025 in the context of what you just told me, Matt, because I'm thinking, how do you balance near-term headline exploration success with long-term sustainable and, more importantly, economically mineable resource expansion goals? Like, what's that balance? How do you find it, and how are you thinking about it?
Well, we're starting point is not to think of this project as a standalone project, right? So when you're thinking about a mine as a standalone project, you're thinking about a high capex
Mm.
that has to be and a resource in a mine plan that has to be and a NAV for the project that has to make the high capital investment worthwhile. So you're thinking about how you're going to finance that capex. So you're thinking about amortization of debt, and you're thinking about, you know, what is the value of a stream or a royalty on this project, and you're thinking about reserve tails on the reserve after the debt's been paid off. So you're thinking about all those calculations, right? So that's pushing you all the time. If you think about this as a standalone project with the higher capex that implies, you want more resource, you want more reserve, you want more mine life, and all the time, right? And you want that on a formal basis, as early as possible, right? If you're thinking about this as a spoke in somebody else's hub and spoke, it's going to a mill. You're not having to account for the repayment of a mill. You're not having to account for the repayment of a tailings facility. You're thinking just about your capex to develop the underground mine, maybe put in some water treatment. You're thinking about development meters. You're thinking about sustaining capital, and your ROI thinking is very different, right? So as I said, we think right now on a PEA basis, we have a 9 or 10 year mine life, right? If you are running any mine plan on an existing operation and you've got a 9 or 10 year runway ahead of you, you're in a comfort zone, right? If you've got 3, 4, 5 years ahead of you, you're not in a comfort zone. If you've got 15, 20 years ahead of you, you're very comfortable. Um, but you know, 8, 9, 10, you're in a good place, right? So, uh, so we think this is already in a good place in a hub and spoke mindset, right? And again, the analog I've always used is Lapa. Lapa did about 100,000 ounces a year for about 9 years, did about 800,000 ounces of production. So again, a similar scale of project, again on the basis that it wasn't a standalone mine. The ore went to the LaRonde mill, so it didn't have to support its own mill or its own tailings facility.
Mhm.
Um, so so then, as explorationists, um, again, I want to bring out directionally where this project is going. You know, we've got 9 to 10 years of resource life right now. At some stage, all that inferred resource is going to have to be converted into indicated resource so that we've got a 9 to 10 year reserve life there eventually. But I don't need to get reserve down at 1,500 meters depth, um, because that's way out there. And I don't need to have a reserve tail going out that far because again, it's not a standalone operation. And so, but directionally, I want a value for this project. I want a value for these ounces. Directionally, I want to show what's going on down there, right? So that there is a context for everything else that goes on in the future. So that's, maybe that, again, it's a long answer to the question, but uh, if let me rephrase this another way. If this was a standalone operation, and I would be looking right at this project and saying, okay, we've got to do infill drilling. We got a lot of inferred resources here. We've got to convert that to indicator because I want as solid as possible. I want 9, 10 years of reserve right now, because I'm going to need that because the capex is going to be bigger, and we've got to show that the ability to finance this project, and we've got to have a reserve tail, and I'll know that inferred resources are going to be meaningless to me in that situation. So I'd be all about infill drilling and conversion, right? Again, I don't see this as a standalone project. I see this as Oregon to somebody else's mill. So I'm thinking, okay, well, that work's going to have to happen eventually, but I'm more interested in actually knowing directionally the scope and the deep stuff, and how big this is going to get, because on a PEA basis, we're already there, right?
Mm.
And so if this was a development asset for somebody else's mine, if it already existed as a development asset attached to a mine elsewhere, um, the owners of that mine would be thinking in those terms,
Mhm.
right? And this is our 5 years of reserve here. Okay, we can get that into our mine plan. We know we're going to get 9 to 10 years out of this because we can see on a broader basis where the additional resources going, but where we're really interested in knowing just how important this is going to be for us in the longer term. Let's put some depots in here and see where it's going, right? So I think that's the mindset we're bringing to this.
Is that mindset born out of your brain essentially together with the team, or is it also being altered potentially by conversations that you might have had or might be having under a confidentiality agreement? So where I'm really going with this is, do you want to keep going it alone? I mean, it seems like you have money, your own money for now, to keep going it alone, but is that how you want to keep doing it? Or do you think that at a certain point, maybe somewhere in the near future, you go, no, we're going to do a JV, or we're going to do an option agreement or something, whatever it might be?
It's really driven by us. So we've got there's a lot of gray hair in this company, and the board is, I mean, Pierre Baudouin is the chair of the board. He was the builder of Canada's biggest gold mine at Detour. He was the chief operating officer on the board of Silvercrest, well, it's cheapest in Mexico. We got Peter MacPhail. I talked about Alamos buying re, the Island Gold deposit. Peter was chief operating officer of Alamos when that deal was done. So he was on the buy side of that mine. He built Young-Davidson, which is just in the Abitibi on the Ontario side. I've done 3 projects before this. I'm a development guy, so there's a lot of we've got Lee Chenard, who's a career in Barrick and IAMGOLD in a technical role. So uh, we have a lot of experience here, so we're bringing that experience to this kind of decision-making process. And very much as a board-involved company, this, because we're not so big that people just show up once a quarter and receive reports at a board meeting. Everybody's connected. Um, uh, in terms of conversations with other people, I mean, there's no company that has uh, a shareholding in Radisson to our knowledge. Um, uh, uh, the MOU that we have with IAMGOLD is strictly a technical MOU. There are no commercial terms in there. Um, it's completely non-binding. It's non-exclusive as well. IAMGOLD and Radisson are complete free agents. It's just an MOU to facilitate the technical collaboration, how people meet and share information, to a common goal. That's all that is. Look, our main job here is to deliver, and it's a cliche, but it's true, is to deliver value for shareholders. We think our ounces are particularly valuable, and we think there's a lot more of them than we're currently showing in our resource. And we think our ounces will go quite nicely through other people's mills, more than one other person's mill. So, uh, we think that the Doyen mill is the obvious candidate. And we think our project greatly improves the Doyen Westwood mine. Westwood is doing terrifically well this year. It's had several years of struggle. A lot of good work has been done by the IAMGO team to I think reduce the scope of that project, right size it, and it's now had several quarters of good cash flow, and they just putting out a new technical report, and they press released it I think 2 weeks ago, and it's there's a healthy mine plan there out to 2032. I think you put in something like us on top of that, and it's very nice indeed. And so that is if you think Dwyer, Westwood, O'Brien from that perspective, what does the Dwyer mill produce from these pieces? It's a healthy future. However, that is to be arranged, and that's a TBD. But that's not the only place where this ore could go. It could go into LaRonde. And LaRonde took Lapa, and we've got a similar metallurgy and a similar setting to Lapa. So that's kind of more plug and play probably for us immediately. But there are some other options as well. We've said that there's 5 mills and 4 companies in the area. So look, we note with interest that Agnico is bidding for O3. And O3 had a very similar situation to us. They had a deposit that um, uh, you know, probably, worked best not as a standalone project, and they always said that. They saw Marban going to the Malartic Mill, the Odyssey underground a situation where capacity becomes available from Malartic. Agnico had said publicly they were looking for new sources of ore for that mill. And there was talk about toll milling and studies that would show this and that, and then finally Nico said, well, okay, we're gonna bid for it. It makes more sense to do that. So, um, uh, you know, probably not surprising to anybody that's been following what's been happening in Quebec gold mining and in the Abitibi. And again, another example of a hub and spoke arrangement, the traditional way of doing this in the Abitibi. A mill that you keep going by finding additional sources of ore to put through the mill. So we're not trying to reinvent the wheel here with what we're proposing, with our project going to somebody else's mill. But in terms of conversations with other companies, direction that we might be receiving from other companies to do X, Y, or Z, everybody's having conversations all the time. We're not taking direction from anybody per se here. Nobody is sort of saying do this and then X and Y will happen. No, this is us as a team. I think making the right decisions for our project, and having the right conversations with people and selecting, I hope, the right destination mill with this technical MOU and so far so good.
Where does that bring you in terms of what you have planned for 2025? I suppose you're going to do a separate news release on the plans, or is that something you're planning? But maybe kind of in a summary, I don't assume we're going to talk before the end of 2025, which is in just a couple of days essentially here. But what are you going to do in 2025? And next time we're speaking, let's say it's in a month or two, what are we going to be talking about?
Yeah, so we will press release what the plans are for 25. And there's a few things we have on deck here. What we can say is, the drilling will continue. We're not going to stop drilling, and the drilling is going to be predominantly focused on deep upside. right? So we're gonna chase some of this deeper stuff. Um, we're gonna have a nice little program based around the jewelry box, um, to trace that up further. Um, but then we'll also be giving some guidance, some of the more development related stuff as well, which the company has generally not talked about too much in the past, but which has been going on. So there is environmental baseline work going on. There is you raised the question of the PEA. I think we want to get to the end of this technical work with Iron Gold. Again, horse before the cart, get that done. Understand the flow sheet and the metallurgy and how that's going to work. And what we've been seeing at this stage is we don't see any red flags there. Get that out in the market, get everybody understanding that directionally, getting everybody understand the metallurgy. I mean, the company hasn't really talked too much formally in the past about metallurgy in this project, and I think people want to see that, want to understand how that's going to work. So, get that all out, and then we'll bring out our plans for 25, and then our plans for 25 will be quite logical, I think, when you see what we've been doing. I mean, we wanted to put out some of these deep drill hole results before we told the world we're going to be drilling more at depth, because obviously we're having success and drilling deep. So
Hmm.
that's the premise for spending more money to go deep next year.
That's it. I think I've gone through all of my questions here, Matt. What am I forgetting to ask you though? What else did you come here hoping to talk about that I'm failing to bring up?
Antonio, you're always incredibly comprehensive. So I cannot say there's anything we haven't talked about.
Well, you've been doing all the talking, so you're really giving yourself a compliment, but it is true. And thank you so much for doing this, Matt, and hopefully speak soon.
Yep. Thanks very much.